QuickBooks just isn't enough when it comes to building and running a successful farm operation. Yes, it's important, but it's important only for one side of your operation, and that is for tax planning purposes. I'm not saying that tax planning isn't important. It's an extremely important part of the overall function of the finances inside of your farm operation. We talk about it inside a Legacy Farmer all the time about how tax planning should be a proactive thing that you're doing at the end of the year, not reactive, which is how 99% of farm operations run their business today. And QuickBooks is going to help fill that gap there. A lot of people inside the industry have the wrong view on what QuickBooks is actually doing for their operation. It's preparing you for minimizing that tax bill or being a proactive tax planner at the end of the year, which is great. But the difference is though, and where the problem lies is when you look at your reports, aka your P&L from QuickBooks, and use that to judge the overall success or failure of your operation for that year, the numbers aren't structured in the way they're supposed to be to actually tell you how you're truly doing inside of your operation for the year. And that's the first thing that we have to solve here inside of this problem. Because if you're not looking at numbers structured in the right way, it's a guarantee that you are going to make costly financial decisions there because you're making it based off of manipulated numbers or numbers that are just showing one piece of the puzzle here when it comes to the overall financial health of your operation and not giving you all the information you need to make sound business decisions. It's a guarantee that not having the information structured in the way that you need and using QuickBooks reports in order to drive big financial decisions, it's costing you a lot of time, energy, money, and stress.